Ladies and gentlemen, big news. Gold prices is now rising and rising pretty significantly as we have predicted 2 weeks ago as I did those videos. And more importantly, right now, UBS has just came out with a major prediction and said that you will hit some insane numbers. So let's take a look and see what all this is about and do we see some opportunities there. Let's watch until the end as I give you my take. So, ladies and gentlemen, so this is the gist of the news. Number one, gold prices is rising pretty fast right now. And more importantly, gold is predicted to hit $5,000 per ounce by UBS in the first half of 2027. So these are very big news, and I think it's worthwhile to take a look at the details. So first of all, it's important to note that gold prices has risen from the low of about $4,000 per ounce to now $4,316 as a video time recording. So this is a pretty significant rise. It's almost close to 8-9% already. And from the high of $5,000 that UBS is predicting, there's still some gap. So question is this going to happen? Well, I think this is something that's worthwhile looking at. And there are many factors that first caused it to fall, and now the same reasons that has caused it fall has now reversed. So I think it's worthwhile to go through it. So if you recall, I've been doing quite a few videos on gold, which is not very normal because I'm usually a CPF guy and a US stock market guy. But this glittery gold has been catching my eye. And of course, during the crash, when it was at $4,000 or so, I've talked about it. And frankly speaking, I've taken some pretty significant positions. And right now, it's at $4,300 now. So this is one of the strongest weekly gain performance since January. So this is not just a technical rebound. This seems to be the beginning of a bull run of a gold price. So I think it's worthwhile taking a look. Now, just be very clear, I'm not as confident as my view is towards CPF and the US stock market towards gold. But I do have some experience dealing with gold. We were live streamers with Taka Jewelry, selling gold for quite a few years. So I've got some sense of gold and things like that. So when I saw price of gold, the prices of gold fallen from the high of $5,600 all the way down to $4,000. I felt that it is really another crash buying opportunity. But however, that said, okay, as I said, I'm not that confident. Even now, I'm still not 100% confident. Nothing is 100% in life when it comes to investment. So, but if you take a look right now, from the high in January, it's not very long ago, just in January was 5,600 points. In fact, it's 5,595. It's fallen because of the Middle East war. The Middle East war fanned the inflation risk, and as a result, interest rate as a risk of going up. And if that were to happen, two things will go down. Number one, gold prices will go down. Number two, stock prices will go down. Today, we're not going to talk about stocks. So, yes, came down quite significantly and it was hovering there. Then I think it's important for us to now identify that the reverse is now happening, and UBS is now predicting that by the first half of 2027, you will hit $5,000 again. So why did UBS bank suddenly turn bullish? Well, it's very obvious. Inflation has moderated. So it's cooling down, largely because oil prices is coming down. And that's, of course, driven by Middle East. I wouldn't say peace, but kind of at least not firing in a big way. And there is a strong likelihood as a result that the Federal Reserve is unlikely to increase interest rate because earlier they even predicting that interest rate rise is possible. And they may even resume interest rate cuts. If that were to happen, then stock market and gold prices will go to the moon. So UBS Chief Investment Officer said, the weakness towards $4,000 and below may ultimately prove to be an opportunity to build strategic exposure. That's what he says, that's not what I say, okay? Just to help everybody understand the chain. So first, when the oil prices fall because of the peace effort between Oman and Iran right now to open up the Straits of Hormuz, then the inflation risk will fall. And when inflation risks fall, the Federal Reserve and the central banks are unlikely to increase interest rate. So then bond yields will fall. When bond yields fall, the US dollar will likely to rise and then gold will become attractive. So that's how things go as a chain. So this was the reason why gold prices fell during the crisis, because the the oil prices were going up because of the war. So now the reverse is happening. So it's just the converse. So it is very predictable if the Middle East situation continues to cool down. So now that the Straits of Hormuz is potentially reopening, one minute they say is coming to a they've arrived at a deal, and next minute is they are arriving at a deal, but not arrived at a deal yet, and so on. So now, but they're directionally moving towards a reopening of the Straits of Hormuz, and that's good. There are some job reports that are coming out that says that, hey, looks like the job creation in US is not so strong. And if that is so, then there's a low likelihood of interest rate rises. So, and that's something that we're all looking forward to. So that's why gold prices now skyrocketing again to 4,300 points. Now, just to be very clear, the Federal Reserve has not turned dovish yet, right? So the Federal Reserve is not saying that, oh, as a result, right now we're confirmed, right? We're not going to increase interest rate and potentially going to reduce interest rate. They didn't say that. In fact, there was some inflationary pressure. And I think that the new Federal Reserve Chairman, Calvin Walsh, is very clearly trying to toe the line with Donald Trump. So it's very unlikely that he will increase interest rate, because Donald Trump hates increasing interest rate. And I think he's going to find reasons to cut interest rate, if I'm not wrong. So if that were to happen, then wow, things will happen in a very positive way. So I think gold prices potentially could set to go even higher if that is the case. So it looks like there is a base case of a bull market run. So the key thing is the central banks are still buying gold, because everyone is concerned that US is now less dependable, and they are potentially, if you put money into US dollars, there are a lot of risk. Number one, they may just confiscate the money if you are against US in the case of Russia, and also in Iran's case as well. But there's also another big risk, is that the US fiscal deficit is still skyrocketing, even though Donald Trump is probably trying his best to cut some of the fiscal deficit through some of the tariffs they are collecting, but the fiscal deficit is still very high. And I think Asia demand for gold is still very high. And clearly, there is no alternative to a very safe asset like gold when it comes to currency diversification. So all these are the reasons why the gold prices has been rising and now continue to rise. But there are still risks involved. What if the US and Iran war breaks out again in a big, massive way? Then oil prices will surge, and then the inflation risk will go up, and then interest rate might go up. Then gold prices will continue to collapse again. So that is a risk. What if the U.S. economy stays very strong? Then there's a strong likelihood that things may get inflationary in U.S. Then interest rate cuts are very unlikely. So these are things that turn the gold prices from this current trajectory of going up to reverse back down again. Now let's try to remember what the analysts are saying. The analysts, if you take a poll of all the analysts across many banks, so right now JPMorgan is saying that Q4 is likely to hit 4,005, and Reuters is saying it's 4,005 as well. HSBC says that by year end 4,007. Goldman Sachs says that by year end you hit 4,009, and of course UBS right now is saying by next year, early next year, we could hit 5,000. Every single one of these prediction that by the banks are saying that the gold price is likely to go up. And currently right now we're at 4,003. Okay. And already, just to remind everybody, A few weeks ago, when I talked about it, it was just at 4,000 points and 4,001. So it is going up and potentially going up even stronger. Now, what if the negative things happen? Can it happen? Yes, it can happen. Right? Investment has always carry risk. So if those things would happen, then gold price will start to fall again, may even fall below 4,000 points. So that's something that we all got to prepare, especially when there's inflation risk again caused by Middle Eastern war. So I think the base case, if you will take an average, will be somewhere around 4,004 to 4,006. That seems to be where the base case is. For this to happen, the Federal Reserve don't need to cut interest rate, but just don't raise the interest rate, and the inflation will continue to fall. Oil situation stabilizes in Middle East, and things just need to resume what they were. So that will be a base case, and the base case is pretty decent really. Now the bull case, of course, for this year, $4,007 to $5,000, is basically says it's conclusively over for the Middle Eastern conflict in terms of the risk to oil prices, and the Treasury yields continue to go down, bond yields continue to go down, and the dollar will get weakened again. And the Federal Reserve signals that maybe cuts are coming. So once they have this kind of signal, then gold prices will go to the moon. So actually, if you take a step back, $5,000 per ounce for gold, not unthinkable. Don't forget they were 5,590 something, right? So right now, to that point, at least a 15 to 20% upside is possible, no? So, but that's barring that those negative things that we are saying that could happen don't happen. So it's something that you got to make a decision yourself. I took some positions largely also because I need to diversify. I probably have too much position in equities and too much position in CPF and bonds. So it's good to have diversification. So you can ask yourself, why are you holding gold, right? It cannot be just because gold is going up, right? So it's all part of asset allocation and diversification at the best time like this when prices are low. So that's my take of why am I doing this, and you got to decide for yourself what you should do. And I'm not telling you to buy; they carry risk in both ways. So, but I already told you, as I did a few weeks ago, I went in pretty strong on gold already. So let me hear your thoughts, and I'll be happy to discuss this over the live stream. Okay, thank you, and may you glitter with gold as well. Bye bye.